You're watching BCTV. We're all about Branford. You're watching BCTV, Branford Government Television, a service of Branford Community Television. This program is brought to you in part through the support of the town of Branford.
Okay, we're going to get started for the Board of Finance regular meeting, October 26, 2020.
And this is a in-person meeting. We're also broadcast on Facebook Live. We are also on BCTV. And for the first two agenda items, we will have a Zoom access. So thank you, folks, for the patience in starting. We're a little late today due to some technology challenges. First on the agenda is to approve the minutes of the July 20th and August 31st and 2020 meeting. And we will, I'll entertain a motion to defer those to the next meeting. Moved by Victor.
Second.
Second, any questions, discussion? Lisa will produce those for our next meeting. So, motion's been made second. Any additional discussion? All in favor?
Aye.
Thank you. Next is citizens' comments and citizens' communications. We traditionally have a period of up to 10 minutes for comments from citizens with regards to the agenda items. Are there any citizens who would like to have make comments or have any other communications at this time? No takers. So I think we will move on to the next agenda item, which is to request from the Finance Director to discuss the James Blackstone Memorial Library Endowment Fund. And welcome, Jim. Thank you. And the treasurer, I believe, Adam Spilka, if I said it correctly. Welcome, and thank you for coming. Mr. Finch, I know you've been working diligently on this. We have had some discussions, but I'll turn it over to you, and thank you for in advance for your presentation.
Okay. Thank you, Joe, and thank you, Adam. I know you have some material which I had sent to you, but again, for the folks at home, I'm going to kind of walk through it, and if it sounds a little redundant based on the papers you have in front of you, that's the reason. So it's kind of for the benefit of the folks in our viewing audience. If you take yourself back to May with the budget that was adopted for the Blackstone Library, there was a reduction of roughly $45,000, and that decision was made based on a belief that there was a surplus that the library had, and that in effect, you know, they wouldn't get an increase because they had a surplus. And in response to that, and with new trustees, I was asked to talk to the library about the town's budget process. I believe, Jeff, you were at that meeting, kind of walk them through the essential steps of the budget process, the roles of the different budget bodies, town departments, commissions, RTM, Board of Finance, etc. And during that discussion, a couple things had basically occurred to me. One was that the whole discussion about the library budget was largely made independent of the impact or potential impact on the library's endowment. And the second part was, while it's been mentioned a couple times here and there, the library's approach to funding its budget is essentially somewhat similar to the way our budget evolves, in that they look at their budget requirements and then they subtract their revenue, which essentially is grants, fundraising, and to a much lesser extent now fees, because a lot of the fees have been reduced in light of the present economic situation. And then they look at the amount to withdraw from the endowment. My understanding is that they use a 3-year average of ending balances of the endowment, and then they essentially have a policy where they could withdraw a maximum of 5% out of that endowment. And it occurred to me that, one, we're in a low interest rate environment, so the 5% seemed potentially aggressive. And two, has that been looked at, has that been tested in a way to determine if that's a sustainable withdrawal rate? And, for those of folks who try to manage their own retirement and they look at what's a sustainable withdrawal rate out of a pool of money, that can be a pretty involved exercise. And then the other thing is, how does the endowment fit into the overall town's budget process? Now, in many ways, because we're budgeting net, it's not always obvious as to the impact. But if the library was a town department and they had this endowment, that piece, which was originally budgeted, I believe, $121,000 in the current year, would be a non-tax revenue to the town, and then the town would basically be raising the net from taxations. So it is a fairly significant non-tax revenue. I know that historically, in my 22 years and change here, there's always a bit of friction between the library and the RTM, and a lot of it, focuses on the percent that the town is funding. I typically hear that, the town's funding 85% of the library, and they have an independent board, independent governance structure. And I sort of look at it a little bit differently. Maybe it's my half-full optimism, but I sort of look at it as if you went to Stop and Shop and you had groceries that added up to $100, but because you have a Stop and Shop card, you get 15% off. So you end up paying 85% of what your bags of groceries would be. If you went to another town or another store, you might have to pay 100% because there is no endowment. So the endowment, while the ownership is the library's, it has a benefit to the town by reducing our tax requirements because of non-tax revenue, and it also helps fund library services at what is essentially the main library in town. And so what I wanted to do tonight was discuss ways to essentially enhance the sustainability, or talk about ways to think about enhancing the sustainability of the endowment, because I believe, in my conversations with Board of Finance members up until this point, is that the town isn't taking the position that this is a declining revenue source. In other words, nobody's taking the position that, okay, we're going to keep drawing from this, and when it's done, it's done. And then the town would be forced to fund an even greater share out of taxation. In many ways, that endowment, as I said earlier, is an asset. And unlike the town's assets, primarily its fund balance, the library doesn't have the same type of investment restrictions. So over time, the library has the potential to make that fund grow at a rate faster than the town would historically get on its investments. So if the goal then is to make this endowment more sustainable, I think it's important to identify, well, what are some of the threats to that sustainability? What are the challenges that are there? As we know from working with our pension fund and our OPEB funds and perhaps or even our own accounts, is that, you know, when you're investing in the market, stocks and bonds and other instruments, that market volatility has an impact on your ability to meet your stated objectives. Primarily, rates could be lower than you're modeling. We've experienced that to some extent with our pension. And this board has, over the years, recalibrated its return assumptions to reflect that. And so I remember when I first came, and times were different then, the assumed rate of return on assets in the pension fund was 8.5%. Now we're down to 6.5%. So that's a reflection of looking at a portfolio and trying to adjust assumptions as conditions change, and also recognizing that in response to some of those adjustments, there's implications, right? So we've actually had, at times, we've increased our contributions to the pension fund because of that. And when the town has gotten windfalls or has had good years, we've historically added money into both the pension fund and the OPEB trust for the primary purpose of bolstering that. The other risk to sustainability is that, you know, the markets right now, I think, while none of us would claim to be market experts, we can make the case that the markets, the stocks in particular, are somewhat richly valued in today's environment. And interest rates are historically low. So those are some threats to trying to make sustained withdrawals out of the portfolio. And when you have negative returns, when you're making decent withdrawals out of a portfolio, you have what's called a sequence risk. So imagine that you're taking money out at the same time that your portfolio is declining in value. And if that happens early or in a time period, the risk of running out of money increases greatly. At the risk of sounding a little bit graphic, it's similar to if you could picture giving blood and giving stabbed at the same time. You know, you're planning to do something, taking something out for a benefit, giving blood, but then all of a sudden you're losing blood at a rate that you wouldn't have anticipated. And then because the Blackstone Library has an independent governance structure from the town, in many respects the town is the largest donor to the library, you have the relationship, and if there's an erosion in that relationship, then funding less than what the library requires could ultimately force the library to do one or two things typically. One is reduce services, either through staff reductions or hours being cut. And two is to make further withdrawals from the endowment, which, as we said earlier, would be counterintuitive to what I think the goal of the town is. So how do we measure these risks and how do we deal with it? Well, the first thing Adam and I have been talking about and talking with their investment advisors, who are is Hightower, which they're also the co-pension advisors and co-OPED advisors for the town, is to review the current portfolio in terms of its construction and risk, and is it potentially meeting the needs of the library, and then to basically test it using what's called a Monte Carlo analysis. The Monte Carlo analysis looks at, in this case, like 1,000 different return and withdrawal scenarios using a variety of market assumptions, to try to determine whether the portfolio as it currently exists is sustainable. And so we did an initial run, just to kind of help us frame the issue. And I say initial because there will be other work that's being planned on this. Because the library endowment fund is something you would conceivably want to last in perpetuity, the question was, well, let's just look at 50 years. And again, the longer you go out, the less confident you might be in the result. But basically, it had a very, very low probability of surviving a 50-year time period, given current withdrawal scenarios. So that kind of confirmed the premise that the library's withdrawal rates were not sustainable. And I might add, this is something that is also a priority of Adam as well. And he's been great to work with on this. He's supported us 100%. And so the process that we're talking about going forward, and I should have said at the beginning that I envision this being at least a two-step meeting and discussion, with tonight's meeting being an opportunity to frame what we see as the issue and talk about some of the challenges, and then outline some steps going forward, and then do some more analysis in which we would then report back to this board. So the first thing is let's shorten the time period a little bit, and let's look at it, the Monte Carlo analysis, over a 30-year period. And let's look at other withdrawal assumptions and see if those assumptions will then give us a more favorable outcome in terms of the sustainability. Once we're able to do that, how does that impact the town from its budget? So assuming, again, we model it in a way that the library develops its request, essentially, you could take the current budget, less their non-town contributions, then you basically would plug in an endowment withdrawal, which relates to that withdrawal rate that's sustainable based on your Monte Carlo analysis, and then you would compare it to the current year and see, well, okay, how much more would the town have to fund? And again, I will emphasize what I said earlier. It's similar to our approach with the pension. When we've looked at it, we said, okay, well, if we use a lower return assumption, we always kind of model and said, okay, well, we want to try to be as close as we can as to a 70% ratio as related to the pension. And we wanted it to be, somewhat, logical and budget sensitive so that it doesn't totally whipsaw the account. And if need be, we could phase in some of these things. But at least we kind of have sort of a direction in terms of how our budget impacts the endowment and then how the withdrawal contribution impacts the sustainability, which is ultimately our goal. Now, we also know that throughout a year, things happen. And I think it would be a good idea if all of us are kind of on this, when I say all of us, I'm talking about the community, is on the same page, whereas if the library does have an extraordinary year, someone does estate planning and dies and leaves the library money in their estate, if the library is able to get grants either through CARES Act, State of Connecticut, or PPP monies, which I believe they're receiving, that rather kind of looking at transactionally in terms of how this impacts the budget, I think it's important for the funding bodies to look at that in the context of the sustainability of the endowment. I think that's a better longer-term approach, and quite honestly, that's more consistent with how the town has operated in many other areas. And this board is certainly familiar with those efforts. I mentioned the pension, OPEB, our self-insurance. Recently setting up the Coastal Resiliency Fund was a recognition that the costs associated with rising sea levels presented an economic challenge and one that would require funding. We treated that as a long-term liability. And so I think this type of approach and analysis resembles a lot of that same thinking. And I might add, when myself and the first selectman met with Adam, Karen Jensen, and Beth Law from the library, Jamie had mentioned that perhaps even a stronger comparison is where we were with Foote Park, I'm guessing maybe 5 years ago or so. And the similarities are very, almost, I don't know, when I started thinking about it more, I was like, wow, that really is a powerful analogy. And I want to share that analogy because I think it's worth underscoring, and that is, if you recall, the Foote Trust was basically saying that the withdrawals from their portfolio to maintain the park, and to a much smaller extent two other beneficiaries of the trust, wasn't sustainable. It was something that they couldn't do. So that what they wanted to do was to get out from under the park, because the park was a draw on the trust. And we certainly recognized that. And essentially what we did is we basically accepted the park and all of its cost, but because the town of Branford was able to operate the park at significantly less than what it was costing the trust, that grant that the Foote Trust gave us was less than what they were spending on a park. That difference, that delta, helped make that trust sustainable. And the similarity to the library is that in both cases, you have outside investment pools that are managed by groups independent from the town, from a governance structure, and yet the town is a stakeholder in that, because those investments have a direct impact on a town's ability to provide services to its citizens, whether it's operating the park or whether it's funding library services. And one of the conversations I had with Harry, I think, was also I thought was pretty powerful, because it identifies common denominators, right? So essentially tonight we're making a presentation to the Board of Finance, or citizens of Branford, to think about how the library is funded, to another group of citizens of Branford, the RTM, with the assistance and help of another group of citizens of Branford, the library trustees. So really, this is, I think, a good opportunity for the citizens of Branford in their various roles, and to see that that's the common denominator, not the library tribe or the RTM tribe or the Board of Finance tribe, and essentially work on a solution that, as we have in the past, puts the town and the library on a better footing for the long term. So that's basically what we're thinking. The calendar is good to us in this regard, and that at the November Board of Finance meeting, our pension advisors present the September quarterly performance, and that will give us an opportunity to share with you an updated Monte Carlo analysis, and that will give me an opportunity to share with you how that could fit into a funding model, looking at the current library budget. So that's kind of what's going on this end, and so
Thank you, Jim.
We'll take any questions.
Maybe before we ask questions, Adam, is there something you'd like to add?
Well, I certainly, actually, could I spend a minute introducing myself, since I haven't had the
Sure.
opportunity to speak to the board before?
Yes.
Thank you. My wife and I moved to Branford about 18 months ago. So we are new to the community. We sublet space, some business space from Robin Sandler, which is how I got introduced to the library, and was made a trustee after I was here for about a month. It may set a record. I'd been doing some pro bono work, and Robin knew about that, and so I went through the interview process. And I have been a lawyer since 1987, although I am essentially retired. For most of that time, I did corporate and securities work for financial services firms, primarily asset management firms. One I took public as general counsel and corporate secretary, and I was corporate secretary of another one, which had about $900 billion of assets under management at its peak. All of that work, through training and instinct, taught me two things. That I was responsible for 34 Act reporting, worked very closely with, early in my career, staff accountants and then CFOs and outside auditors, in the context of what you say has to be true or you're going to get sued for fraud. So that is all of my training puts me in a situation like this to tell the truth, because that's what you have to do. The clients demand it. You have to be able to tell them whether you've got good news or bad news. And you develop a reputation for doing that. And one of the reasons that Beth and Karen and I wanted to meet with Jim and Jamie early on is because we were, I will say, surprised and frustrated by some parts of last year's budget process. So we wanted to make sure that the library had an opportunity to make its case based on facts and data and actual numbers, not suppositions about what a year-end surplus would be literally midway through our fiscal year. So that was something we very much wanted to accomplish. My other role as corporate secretary gave me a lot of respect for process, pragmatic process, not more process than you want, because that's bureaucracy and nobody wants that. But the idea that there's a budget process and we work with staff, and that's overseen by the finance committee and then reported to the entire board, and the board approves and it gets submitted. And to the Board of Finance, then to the RTM, the respect for process and making sure it works appropriately is also something that I bring to the party. So I'm pleased to be here to speak in my limited role on behalf of the trustees and the library and the patrons. I very much believe that, though it may be naive, I don't have the history with the town, I don't have the history with the library, and I have very little municipal finance experience, although in my prior roles I sometimes spoke to town boards, pension managers, things like that. I hope it's not too naive to say that it can be more collaborative and more of a conversation and less, maybe less friction, to use Jim's good word, than I saw last year. That's my hope, and that's, I want to sort of begin that message now, and hopefully I and others can continue it over the course of the next year and into the future.
Thank you, Adam, and I'm sure the board is happy that you're participating.
Thank you.
It's like a great asset to them. So thanks, Jim, for that. And questions from the board with the group?
Yes.
Harry, go ahead.
Thank you. Well, to both of you, is the trust, the endowment, is it a restricted or unrestricted trust? Because it means a lot in terms of, if it's restricted, you may not be able to be using any of the corpus of the principal. Jim, did you mention the 5% rule somewhere when you opened this up today?
Yes.
So 5% is a 990 PF. That's a private foundation. And you're required to disperse 5%, which is, if you're not making enough income, it'll become part of the principal and the income that will come out. And I think that's where we're concerned over the future.
Right.
So that's something we should look at.
Harry, those are probably, who does the audit on that?
Bailey Scarano.
Okay, so that would be
We should get that question.
The audit should tell us the restricted and non-restricted portions, if any, of the fund balance
Yeah.
in the accounts, so.
Because that'll help us in our planning.
Yes, absolutely. So if we could get a copy of the latest audit, that'd be helpful.
And the other question is, who is the investment advisor to the fund at the current time?
It's the Andriol Group, which is part of Hightower.
Yeah, they're also the co-pension managers and co-OPEB managers.
And how often do we have a review with the investment advisor? Like, I mean, do you look at it like every 3 years in terms of their performance?
We
Either
actually,
stay or change?
sorry, we were actually planning one earlier in the year, and when COVID hit and the volatility hit, and investment advisors and others were busy with dealing with that, we decided to put it off, frankly, in part because I think how they do during the current volatility will be an interesting data point. So we were planning to do the review this year. It may be put off until, well, I would discuss it with the Finance Committee to see what they thought, but it could be put off another 6 months, or it could be done sooner. I confess, I don't know when it was last done. It was Rick Mahoney last year who proposed that we do it, and then the schedule got in the way.
So what's the balance now in the investment fund?
As of close today, it was $2,925,000,
And the performance year-to-date on that?
just over 11%, based on my telephone.
Thank you. So if there's other information we want, Harry,
Yeah.
we could pull that in for the next meeting, that'd be
Right.
good. I think this
Yeah.
this has been very informative. Again, we respect the process, the budget process, our role of the RTM. I think it's great, Jim, that you bring forward the educational component of it so that it's informative. And this is a good time to look at it. As we know, the library budget is, last year we appropriated $1,488,000, and the RTM reduced that by $45,000. And that's their right and they had reasons to do that. I think we're trying to be as informative as possible and looking at this. Again, it's just a little more than, I think, 1% of the budget, so, but we look at, as I'm sure you understand, every budget pretty intently, and the board has experience, so we understand the workings of the library and as well as the other departments, but, any other questions from Jim or Adam? We'll go with Victor, I'm sorry, Charlie.
Is Victor next?
No, go ahead, Charlie.
Listen, I agree with the consensus that, we should find some way to maintain the sustainability of the endowment. That's the revenue side. But are we looking at the other side, which is the expense side, and how we are spending our money? Because if you control the income, but the spending isn't controlled as well, then we're still out of balance. So is that part of this whole discussion?
Well, I think I would say the expense side is always being scrutinized. One of the reasons for last year's surplus, there were two major contributors to the surplus last year. One was surprising success fundraising in the fall, but the other was Karen Jensen was able to manage some staff changes. So that reduced salaries and related expenses significantly. I can't say to you that there is a regular and rigorous analysis of every expense. That I'm not sure that every line item is examined that way, certainly not by me as treasurer, but I certainly work with Karen and Kathy Oxley, the business manager. And most of the increases would be seen by this board in our budget request. So if there were line items that went up surprisingly, I would have certainly we as trustees would be asking the questions before it came to you, so we could answer your questions about why any particular expense item had gone up.
I just remember some years ago, because I've been around a while, that the wages and benefits of the Blackstone Library employees were better than the wages and benefits of the town employees. And because they were an independent body, they could do that.
Well,
Yeah, well, I think that's something that the library can look at. I don't know that that's the case, so.
I don't know that that's the case now.
Yeah,
But I do remember that one time when it was an issue.
You know, and again, I think on a lot of these discussions, it's important to kind of, as Adam was saying about, verifying things. It's all, a good process is always to try to the extent one can, is agree to a set of facts and then kind of move forward from there. One of the things that we're modeling a little bit, and it's not overly scientific, but is to basically take the library budget in terms of its major components, and there's probably about like 15 line items, and then kind of model that, if you say salaries are going to go up, let's just look at, like, say, a town contract, like, let's just say 2 and change. You model benefits, payroll taxes, that's a significant amount of the library budget. So the overall budget's about $1,750,000. I'm just looking quick, about 960s in salaries, payroll taxes about 80, benefits and insurance is 332,000, and then the next biggest line is the materials in the collection at 95,000. So you could so what we're going to do is kind of model that out over a period of years, and then kind of seeing, controlling for the withdrawal rates out of the endowment. It's almost similar to, and I shouldn't dare to venture into this because I know it conjures up a lot of thoughts and theories, is, well, how much fund balance do we use to balance the town budget at any given time?
I have to say it, huh?
Yeah, I know. And the taxes, and then, what's the right amount, what's too much, what isn't? And it's still trying to balance that, right? You want the fund balances to be sustainable, but you're still trying to reach some budgetary objectives. So in that regard, they're somewhat similar, but certainly not identical, because the endowment's a separate fund from the library's operating budget. Our fund balance is, as the name would suggest, is part of the same fund that the budget you're adopting. But generally, Charlie, to answer your question, you will kind of see how that plays out, because but for our kind of purposes, the variable that we're trying to control for the most part is the withdrawal rate. So that's really the higher focus here. What does this change in philosophy or due to, budgets based on different withdrawal rates?
Thanks. Victor, you had a question?
No, I just
Comment?
wanted to comment that the library is a great asset to the town, and I feel that the endowment is a gift, basically, to the town budget. It's my view, in a way.
Thank you. Questions? Bob?
Yeah, just a comment. Listen, I think it's a great exercise to stress test the portfolio for the future funding payments as we go forward. I think it's long overdue. And I do want to just, point out that from the commercial space in lending, if we're using a portfolio, we're using about 60% of that portfolio, looking at that depletion going forward. So, when we look at this, we want to be sure that we're not looking at 100%, right? Because somewhere along the line, there's a variation in whatever the portfolio might be with what's going on in the market today. Again, I know it's going out over 30 years, but, that depletion, if I was lending money on that portfolio, I would just look at 60% of it.
Yeah, I'm sorry.
No,
I will tell you that the Monte Carlo analysis is typically picking a point of value and not discounting it. It's essentially looking at it in terms of, close to a fiscal year ending period, because that's kind of how we operate, kind of on a fiscal year basis. And at that point, and because it's been up, as Adam pointed out, the analysis was using like 2,750,000, which say it was 2.9 and change. So it's a little bit higher but, you know, one of the things that, you know, when you had mentioned about the lending piece is that, you know, because primarily the rates are so low, it's not generating enough income to generate the loan.
Correct.
In that case. So, and that's one of the concerns was, well, where's the 5% coming from if bond yields are virtually non-existent? You know, because, I mean, I remember getting 4 and 5% on CDs, and it didn't seem that long ago. And Joe could probably remember when it was 9 and 10, right? In the 80s, probably, right?
Absolutely.
So, you know, there's a lot of different. Back then, it was easy. Like I know you two guys are in banking. I used to hear the old story that, you know, banking was a good business when you could have loans at 12%, deposits at 6%. You know, the spread was great forever, and institutions made money. So, but the Monte Carlo analysis does take into, because you're looking at 1,000 different universes, you know, that they're all measuring at the same time and looking at the probability. Now, of course, in reality, there's only one universe, right, for the library. And, you know, it really has to sort of play out and see where it goes. And so one of the other aspects of this is, you know, how often do we want to, you know, look at this? You know, you don't want to put it on a shelf and forget about it, but at the same token, there's probably some right number of a frequency that makes sense to do this. Not that it's directly related, but on a pension side, we do our valuations every 2 years. You know, how did the investments perform? How did our liabilities perform? What happened over the years? Any changes in mortality tables? Any changes in wages? You know, any changes in health benefits as it relates to OPEB? So I think it's kind of needs to be built into an ongoing process, and certainly tying it back to a funding process with a goal. You know, once you set the goal and making the endowment sustainable, then I think if that's sort of a you know, no compromise position, then it's going to drive you to make certain decisions. And so, and again, so ahead of time, you know, the next meeting you'll get a better flavor as to, you know, what those decisions might be. So.
Thanks, Jim. Other questions? We're good? Jeff? Sure.
I just think this is good for everybody. Like Jim mentioned, the citizens groups to get a better understanding of the whole process and make a better presentation annually.
Thanks, Jeff. All right, and Adam, thank you for coming.
Thank you. Thanks for the opportunity.
Sure. Okay, we're going to move on to the next agenda item. Item number 4 is to consider and if appropriate, approve a request from the finance director for the following budget transfer from contingency $150,000 into transfer out for FEMA $150,000. Jim, what's the contingency balance as of?
The contingency balance with the items on tonight's agenda will be $711,000.
Thanks, Jim. Okay, and Jim has presented us a letter to explain his request. Jim, you want to carry that and take
Sure.
that away?
Yep. You know, lots happening as we know, and that's probably an understatement in our world today. But how are some of these events impacting Branford? And essentially, you know, what we affectionately refer to as the FEMA fund, which accounts for various disasters declared and undeclared, and some that we think might get declared, has seen its share of activity in the last, you know, 9 months or so. And what I'm asking for here is an additional $150,000, and we really have a variety of activity that's coming in and out of the fund. So for example, we started the year with a balance of about 103,000. At the end of last year, the Board of Finance and the RTM approved 150,000 into it. We received some money from Health and Human Services for COVID-type activities, which was based on Medicaid billings. And we have a number of events going on. We have the COVID, which is still an ongoing event. And when that ends, I'm not 100% sure, but we continue to incur expenses there. You also have Isaias, which was a storm that we had around 4th of July-ish. And then, to make matters worse, we had the storm on August 27th, in which virtually all the town was without power, and we had significant tree damage. And at the time I talked about how the town has, some tools at its disposal. Some of those are related to external players, FEMA, State of Connecticut. I mentioned Health and Human Services. COVID has an impact on polling. We get dollars for that as well. And to kind of make matters a little bit worse is I attached an article in terms of what FEMA is describing as eligible protective measures. And there's a lot of frustration both in Hartford and town finance directors and emergency prep directors across the state in the way that they're interpreting that. And the goal is that we're going to get considerably less reimbursement because of that. The state has their coronavirus relief fund, and that was set up based on a survey that was done many months back. Towns estimated what they thought they were going to spend through 6/30, and then the towns were given what they estimated. Their process is a very detailed, painfully detailed process that where you enter into a portal, and we have until the end of this week to file our claim through June 30th. Once communities have done that, the vast majority of communities are still not filed. The state will then look and see how much money they have left in that pot, and will make a determination if there will be another filing period. So the overall theme here, and it's not necessarily a good one, is that, as it relates to COVID, it's ongoing. The state money is limited, both in terms of amounts and in terms of time. And, we have two storm events that are, at this point, unlikely to receive a declaration. The tornado out was devastating to Branford, North Haven, sections of Guilford and North Branford, and some other areas in the state. Wasn't a widespread enough disaster to qualify, which is good for the rest of the state. It's not necessarily good for us, but and so it falls back on us, right? And down at Branford, as a conservative budgeting approach, we do budget dollars in contingency for some anticipated contingencies, labor contracts, etc., some legal fees, and also we have contingency for events that we don't foresee, and so this is actually, this $150,000 is going to help offset some of those costs. I don't know if, I think there's a good chance, seeing where COVID goes, that we could be hitting this again. That situation continues to evolve. But like I said, we do budget a contingency. The town does have a healthy fund balance. And it is during uncertain times such as these that it's at least comforting to know that the town is well reserved, right? So at this point, I'm asking for, $150,000 to cover or offset some of the costs we've had to date, with the hope that we'll get some additional funding from FEMA and the state.
Thanks, Jim. Thanks, Jim. Questions for this transfer?
I'll move it, Joe.
Been moved by Bob,
Well, second it.
seconded. Discussion?
I have a question.
Question?
Can we call that operating transfer out FEMA fund?
It's an operating transfer out to the FEMA fund, from the general fund.
It just says FEMA on it.
Oh, does it? Oh, okay.
It would go into the fund, and the fund is the, which he did describe early on.
Yeah, it's to the FEMA fund. I should have put fund after the FEMA. Yep, I see it, yep.
Okay, little typo on that. Other comments or discussion? Questions? All in favor?
Aye.
Thanks, Jim.
Yep.
Next is item number 5, to consider and if appropriate, approve a request from the first selectman for the following budget transfers. From advertising, printing, and binding, $200, into Woman and Family Center, $200, and the other portion is that's in the executive budget, and in the solid waste budget, a transfer from salary, $16,760, transferring into material handling for the same amount, $16,760. Jamie?
Thanks, Joe. So yes, in the executive budget, we do budget $300 a year to the Women's and Family Center. At the end of this fiscal year 20, we had not received the bill for the $300, and we received one for $500, and that was to cover both fiscal years. However, when submitted for processing and oversight on our part, we had it was supposed to be split over the 2 fiscal years, 20 and 21. It was all charged to fiscal year 20, therefore creating a deficit in that contribution to the Women's and Families line item. So we're requesting to move it from advertising, printing, and buying to cover that shortfall. And this is for fiscal year 20.
Okay. Questions on this from Jamie?
I'll second it,
Moved
Joe.
and seconded. Discussion? All in favor?
Aye.
And Jamie, the second part of this?
So you may recall last month we forwarded to request to transfer into material handling for solid waste. You may recall that primarily the recycling disposal fees have been with the falling out of market, and we changed from our revenue to expenses, and as well as this change from what's classified as co-mingle to single stream material when it gets to the facility, which results in a higher disposal fee, created a shortfall in that account. However, when it came a couple months ago to transfer that money, it was once again an oversight that we had the May and June bills were still in dispute. We were waiting for those to be adjusted, and they had not been entered into the system. Therefore, I'm back tonight to ask for $16,760 to close out that. And once again, this is for FY.
Okay. Questions from Jamie?
I'll move it, Joe.
Been moved. Moved, seconded by Jeff. Discussion? All in favor?
Aye.
Thank you. Thanks, Jamie. Next on the agenda, item number 6 is to consider and if appropriate, approve request from the tax collector for the following budget transfer from contingency $66,000 to tax department overtime $48,798 And consulting, $17,760. Hi, Bobby, how are you?
Hi, I feel like I haven't seen everybody in forever.
Yes. Welcome.
Thank you. Okay, I don't know if everyone got the same copy that you did, Mr. Mooney?
Yeah, they should all have a copy of the letter. Is that
Okay.
correct?
Yeah, we do.
Yes.
Would you like me to read through it, or does anybody have any questions about it?
Yeah, if you maybe hit the, yes, it'd be good to go through it so we understand what the
Okay, I'll
nature of
just
the
read it
request is.
then. Again, in light of many factors, high volume of staff turnover as a result of retirements of our seasoned staff, loss of in-person training time due to COVID-19, and the impact of the governor's executive order, I'm not a popular person right now, to defer the tax payments. Tax office has faced several challenges. We've brought in a consultant. We're in the middle of our audit, correct? And we've adopted lockbox for the first time this year, double-edged sword. Added to all of this, the tax deferral payments are happening or have happened at the same time as the sewer, that overlap, causing a backlog in payment processing. At the request of the Finance Department, we met to discuss these challenges and concluded that we should seek the following. Number one, create and fund an overtime account within the tax office, similar to what we currently do in the assessor's office. These dollars will fund additional hours for the Assistant Finance Director and Assistant Tax Collector. And number two, increase the consulting budget to provide additional training for the staff. The overtime estimates were designed to take us through the remainder of the fiscal year. The Assistant Finance Director will seek to assess and evaluate the current processes and procedures and incorporate suggestions identified by the consultant. And finally, she will look to improve the coordination between the tax and finance departments while strengthening the existing team to better insulate the town from the turnover associated with the election cycle.
Okay. Thanks, Roberta. Questions from the tax collector with regards to this request? Charlie?
Hey, Bobby, do you find the adoption of the lock boxes is helping?
It has. We just got to get the bugs out of it. The initial try of it, a few little hiccups which were getting smoothed out. But yes, overall, yes, because.
Okay, so it is helping.
Oh, absolutely.
Yeah, but there's another fee to the town that we pay for that, isn't there?
There is a fee.
Yeah.
Jim, do we have a number on it, what it costs?
My recollection when we met with the bank, I think we were somewhere between $6,000 and $7,000, it was the estimate. And that banking services in Branford and like many towns, it's done through a compensating balance arrangement. So in other words, based on the deposits we have with the bank, they do an analysis to determine if the balances are sufficient to cover the fees. And historically, we've been okay in that regard.
Okay.
But on the other hand, it somewhat helps in a way too, because the lockbox speeds up deposit into the bank, which increases your deposits, which is a factor in your compensating balances. It doesn't offset, but it's
a factor.
It's a factor. Sorry.
Okay.
Thank you, Jim.
Victor?
No.
Questions? The only question I had was, well, why don't we deal with this, and then we got a follow-up question. But so, questions on this transfer?
Yeah, just
I'll move it.
Let's go.
Yeah,
We got a
so
question,
Robert,
and then we'll go to that.
so the lockbox, you probably had a lot of rejections that you had to manually post, or?
I won't say a lot, well, compared to how many are going in, I wouldn't really say the fallouts are a lot, but we had to set up parameters for what we wanted to drop out that needed to be manually processed, et cetera. I think the best upside to it, of course, as Jim mentioned, is the deposit goes in much faster. People are getting their checks back and they're clearing their bank much quicker, because prior to this, it was trays and trays and trays of mail that had to be opened manually and processed. So it's much, much quicker, and it's helping big time.
Thank you.
So just to clarify too, Bobby, the overtime will fund through the fiscal year?
I believe,
Yeah.
yes,
And that's for the assistant finance director and the assistant tax collector?
correct.
Okay. And those are in addition to their normal hours.
Yes.
Okay. And with the consulting, that's again through the fiscal year, or is that on a shorter period of time?
I believe they're both, the figure that was chosen, I think, was,
I think it was going through January of 2021, I believe, right?
yeah, not for the rest of the,
Yeah.
we don't think we'll need her beyond there.
Okay.
The consulting went to January 1?
Through the
Through the end of January.
Okay.
Through the end of
That would
January,
be
Charlie.
second installment collections time.
Okay. And I know we don't have an update of the report to date.
Yeah, we typically would be running those at a month end. So in other words, it would
Through
be.
the month end of
so it'd be-
September?
so-
Do you have this?
Well, no, we distributed September back earlier.
Okay.
And then there was one, I think, we ran one as of October 5th to try to capture, the
Yeah.
deferral.
Because wasn't the deferral through October 1st or is it through October?
First, yeah.
What's that?
October 1st, yeah.
October 1st? Okay. And so far as of today, is there an update or generally an
There is
ad hoc
not,
update?
I was requested to hold off on that report.
Yeah, we had to call QDS and have them, for the audit reports, we had to kind of have them move back to a current year of 2018 brand list so that we could get reports for the auditors. Once those reports are worked on during the audit, they'll be able to move everything forward a year again. But right now, we're just in a couple weeks of limbo.
So, not to put you on the spot, but motor vehicles, that's all paid in one installment?
Yes.
And that was through, is that pretty much on par, or is that running behind?
I'll be honest with you, I haven't had a chance to look, I've just been collecting.
Yeah, I mean, the motor vehicle was about 85% collected.
And that's traditional?
I'd have to go back and look. I normally don't have this breakout. I'm usually looking at it in the overall financial system.
Gotcha.
I mean, motor vehicle typically has a lower collection rate overall, but I don't know if the 85, where the 85.
Right. Okay. All right, so we'll wait till the next meeting and we'll get an update then. That'd be nice. Thank you. Somebody wanted to, other questions, or if not, somebody can move this?
I'll move it, Joe.
Been moved by Bob, seconded by Victor. Additional discussion, questions? All in favor?
Aye.
All right, Bobby, thank you, good luck.
Thank you. It's been a hot spot in there, but I still love my job.
Good. Good luck, thank you.
Thank you.
Okay,
Don't call it a hot spot, is it?
oh, it's all right. So, with no other business to come before the board, I'll entertain a motion to adjourn. Moved.
Second.
Seconded by Harry. All in favor?
Aye.
Thank you.
This program was brought to you in part through the support of the Town of Branford. Watch town meetings and other videos on demand at BranfordTV.org.